Talking about emerging markets, let's talk about the equities, which have been hitting some of the highest levels in 8 months. Emerging markets have been riding the surge, of course, in commodity prices and hopes of further central bank stimulus. Our next guest owns and operates a portfolio of assets in South America, ranging from oil producers to infrastructure projects and real estate. Joining us is Juan Sartori. He is executive chairman of Union Group. Good to have you with us.
Thank you.
And your holding company is about 40% owned by Dundee. You work with Ned Goodman, a huge name in Canadian business, very well-known character, certainly, very successful investor. In South America right now, let's begin with probably distressed assets and how you're seeing Canadian investors look to some of these opportunities.
Yeah, well, as you were mentioning, Ned, I want to thank him because I was with him less than 10 minutes ago, and he's the one who lent me this tie to go on television. He says, otherwise you would embarrass me otherwise.
Right.
So thank you, Ned. And the story started around 10 years ago, precisely with Dundee, where we thought Latin America had big opportunities and was slowly going to benefit from a lot of investor flows. In the last 3 years, the economic downturn, mainly commodities going down, presented some of the best opportunities we have seen. You know, and right now what's happening is a change between, for example, take Brazil. Some of the worst GDP numbers in very, very long. However, is this year the best performing stock market in the world.
Well,
so,
and it seems like every institutional investor in the world is looking at Brazil right now as well. Are there still opportunities in Brazil for some of the distressed plays?
For sure. The amount of bankruptcies in Brazil has reached the record. So the huge amount of opportunities of restructuring, distressed assets is really much larger than just a couple of months of positive investor flows. So we are, for example, investing in Brazil. For the last 3 months, we are looking at a lot of deals. There's very good valuations to pick up good assets.
And are you acting on behalf of institutional clients? Give us a sense of the scale that you're looking at in terms of companies that you're buying up. Are they massive operations or not necessarily?
It depends country by country because we operate across the whole of Latin America. So obviously opportunities in Brazil are going to be more in the $50 to $200 million sizes. In countries like Peru, Colombia, Uruguay, Argentina, maybe we work more on $20 to $50 million investments per companies. So we target really the size to the size of the market, the size of the opportunity, with an idea of having a liquidity possibility on the exit side.
So Argentina, you and I were talking before we came on air, Argentina as a real estate play right now, how interesting is that to investors? We know the stock market's done incredibly well, but the rest of Argentina, the rest of the economy, still room for lots of investment.
Yeah, as usually in emerging markets, and for example Argentina particularly, the stock exchange is a very small percentage of the total investable universe. So actually you have to go into private equity to take advantage of the best opportunities. Real estate is a typical example. You have a couple listed Argentinian real estate companies that have done very well. However, on the private market, there's still an opportunity to go pick up assets, consolidate, improve management. You have to think that Argentina just removed capital controls. It's just removing all of the restrictions that the former government had put in place.
There was a bit of a honeymoon period, though. Is that still going on, or is it quite reality-based investing right now?
It's fading out, basically.
Well, how much can one man do, you know, in a year?
Exactly. I think he did almost everything that he could, and in a very quick and efficient way. However, one man cannot turn around an economy in 6 months. So we'll see now the tougher part of the job that is a little bit longer, that probably over the next 2 to 3 years is going to show its results.
You're from Uruguay. Actually, you started your company by exporting fruit, because it's the opposite season in North America. So blueberries and other things to North America, and then it grew from there. Uruguay is a tiny economy, but often gets pulled along with what Argentina is doing or not doing. How is it doing as a small place to invest?
Uruguay is doing well, and actually when you look at the whole of South America, you know, compare with the problems that you see today in Europe or the uncertainty of the presidential election in the US, South America is becoming a relatively safe haven. Right. You know, you have economies growing between 1% and 3% this year. Smaller countries like Peru, like Uruguay, turn around in Argentina. So we are finding our place in this universe.
And are the wealthy of South America interested in keeping their money at home in a new way?
Yeah, for sure. We are seeing right now, and you know, it's a moment where mostly locals and insiders take advantage of these opportunities because foreign investors take a little bit more time to come back to take distress opportunities. So we see a lot of the people that send money away in the good years coming back, reinvesting in these countries and taking over some of the assets.
Chile, of course, is such a play on commodities. It's been hit by the rest of the world's struggles with commodities, up on an upswing now. But Chile has been a relatively stable economy by many measures for a long time.
It's been a great country to invest in boom times and also when times were not so good. They usually take decisions relatively quickly. Reforms are implemented very quickly. So it's an example country in Latin America of economic growth, but at the same time with a sustainable economy and very strong implemented reforms.
And Peru, at one point, Peru was still a very early stage economy to invest in. It's matured. Still, tell us a bit about Peru.
It's mature, but we believe it's in one of the best moments because it still retains high levels of growth, 3-4% in the current environment, but it's now much safer and much more liquid as a market. So they have a new president that is a business-friendly president, implemented around 2 months ago. So they have good governance, good institutions, strong growth, and still attractive valuations because it has not gone up as much as some other places.
Colombia also much safer, a place where certainly the Canadian banks have been very interested in investing in Colombia, a much more stable government situation as well. What about the real estate side of things there? Yeah,
well, if you look at all these countries, it's a similar situation. They are really doing relatively well. And real estate is one of the main industries where real asset investors, particularly, there's a lot of appetite from Canada to diversify from very hot real estate markets that are getting a little bit edgy into some new ones. And Latin America can be a good opportunity for that.
Okay, it's great to get your thoughts, Juan. Thank you for joining us.